Welcome to the Deep Dive.
Great to be here.
Today we're digging into something really critical for understanding global economics right now, especially relevant if you're tracking international relations shifts, maybe for exams like the UPSC.
Absolutely. We're talking about the recent U.S. government tariff actions.
Exactly. We've got quite a range of sources. Global Times is a key one for this discussion, but also reports from the Wall Street Journal, BBC, CNBC, Financial Times, Kyoto News.
Good cross-section.
And our goal, our mission for this deep dive is really to unpack the U.S. tariff strategy. What are the stated goals versus what experts think the real aims might be?
And crucially, the potential fallout globally, for economic stability, international relations. It's all interconnected.
Yeah, you really need to look beyond just the headline trade figures to get what's going on.
Well, that's what the sources suggest, right? A potential fundamental reshaping of the whole global trade system.
So the official line is often about trade imbalances or protecting domestic industries.
Standard justification.
But is there more to it? That's what we want to explore. Are there deeper motivations, and what are the ripple effects?
Okay, so let's start with the measures themselves.
Right. So the U.S. government has rolled out these reciprocal tariffs, basically taxes on goods coming in.
Standard tool, but the application here is interesting.
Very. Because there was this 90-day pause announced back on April 9th for most countries.
A key word there, most.
Exactly. Because the tariffs on China, they remain very much in effect. No pause there.
And the figures mentioned are pretty high. The White House claim is tariffs up to, what was it?
Up to 245% on some Chinese exports. That's significant.
It is. And it underlines what the Wall Street Journal noted, that China is, right now at least, the clear central focus of U.S. trade policy.
Which raises a question, doesn't it? Even with this temporary pause for other nations, does that really shield them from the bigger shifts happening?
Probably not in the long run, because the expert analysis we're seeing suggests the U.S. might have goals far beyond just tweaking trade deficit numbers.
Yeah, the consensus seems to lean towards the U.S. aiming for a much bigger change, a real alteration of the global trade order itself.
Exactly. And if you look at, say, the BBC report, it kind of connects the dots.
How so?
It suggests the U.S. goal is to disrupt the existing system, the one that's largely revolved around China being, the world's factory.
Okay, so challenging that central role.
Right. And remember, this isn't happening in a vacuum. We've already seen tariffs on steel, aluminum, cars.
Plus those export restrictions on tech, like semiconductors.
It's a broader pattern of action.
So a multi-pronged approach.
Yeah.
But here's a twist from that CNBC survey.
Ah, yes. The impact on U.S. manufacturing itself.
Right. It suggested that bringing supply chains back to the U.S. might actually double costs for some companies.
Which is counterintuitive if the goal is purely boosting domestic industry.
It is. And it suggests companies might just look for other low-tariff places to go, not necessarily back to the U.S., so that big reshoring wave might not happen as expected.
Which brings us back to the underlying motive. Arthur Kroeber, writing in the Financial Times, had a pretty interesting take.
What did he argue?
Basically that the stated U.S. aims fixing deficits, boosting jobs, are often contradictory or maybe just unachievable with the policies chosen.
So a disconnect.
Yeah. And his analysis points towards a different goal. Essentially, removing the constraints the current global system puts on the unilateral exercise of U.S. power.
So less about economics, more about power dynamics and freedom of action for the U.S.
That's the argument. Of course, the U.S. government frames it differently. It's about make America great again, right?
And Li Hedong from China Foreign Affairs University, writing in Global Times, sees it as an attempt to build a US-centric trade system.
A system designed to sort of coerce other nations into accepting a U.S.-led economic order.
And in that view, China, being the world's second largest economy, is the biggest obstacle to that goal.
Makes sense from that perspective. And the potential fallout, well, it could be huge.
The Wall Street Journal had that stark headline. The U.S. and China are going to economic war, and everyone will suffer.
Yeah, that sums up the potential global risk. We're already seeing disruptions, volatility in financial markets, stocks, currencies, you name it.
And it's not just markets, is it? Bai Ming, from that research institute linked to China's Commerce Ministry, warned about supply chains.
Right. He argued in the Global Times that these tariffs could actually lead to the disintegration of global supply chains.
Which would hit industrial development everywhere, not just in the U.S. or China.
And you can see this concern reflected elsewhere. That Kyoto News poll in Japan, for instance.
What did that find?
Really high numbers. Over 84% of Japanese respondents thought the U.S. tariffs would negatively impact their daily lives.
Wow, that's widespread concern.
And almost 74% felt the tariffs were unjust. So it's not just an elite business concern. It's hitting the public consciousness in major allied economies, too.
Okay, now, there was that other Wall Street Journal report from April 16th. It suggested the U.S. strategy might go even further than tariffs.
The pressure campaign aspect.
Exactly. Reportedly, the plan was to pressure, over 70 nations?
Yeah, to limit their dealings with China in various ways.
Like blocking transit of Chinese goods, stopping companies relocating there to avoid tariffs, maybe even rejecting low-cost Chinese products.
It sounds like an attempt at economic containment, doesn't it?
It does. And Hu Jianguo, formerly of that Chinese Commerce Ministry Institute, writing in Global Times, he saw the selective pressure tariffs on China pause for others as a tactic.
A tactic to do what?
To try and undermine global resistance, sort of divide and conquer, maybe?
But will that work? That's the big question.
Well, the counter-argument is that many countries, they still want and need to trade with China. Its competitiveness, the demand for its products, especially tech.
It's hard to just switch that off.
And Hu himself warned that forcing major economies decouple from China could actually trigger a global recession.
Which nobody wants. A serious warning.
And Li Haidong, back in Global Times, basically said even with the temporary tariff suspensions, no country is truly safe from the long-term impact of these U.S. policies.
The global economy is just too tangled up for that kind of neat separation.
So how did China actually react to all this?
Well, according to He Weiwen from the Center for China and Globalization, again in Global Times, the U.S. might have miscalculated there.
How so?
They apparently didn't fully anticipate how quickly China would bring in its own counter tariffs and other measures.
So a rapid, strong response.
Exactly. It shows China isn't just passively accepting this. He Weiwen argues China isn't weak here and won't just buckle under tariff pressure.
Right. So putting it all together, the general sense from the sources we looked at, it seems these U.S. reciprocal tariffs face some serious hurdles.
Yeah, the argument builds up strong global opposition, coordinated pushback, especially from China.
Plus the risk of hurting the U.S. economy itself.
It all suggests these measures might, well, ultimately fail to achieve their likely intended goals.
Okay, so the key takeaway for listeners, especially those tracking global economics for UPSC or similar interests.
It's that these U.S. tariff moves signal a really significant strategic shift. It's not just about trade balances.
It looks more like an attempt to fundamentally reshape the international economic order.
With China as a clear primary focus, yes. And critically, even countries that got that temporary pause shouldn't assume they're unaffected in the long run. Things are still very much in flux.
Which leads to a final thought, something to mull over. Given how interconnected everything is, what are the likely long-term consequences of this push for a more U.S.-centric trade system?
And how will different countries, different economies try to navigate this, to protect their own stability and growth in this changing landscape?
Complex questions, definitely. No easy answers there.
But understanding the drivers and potential impacts of these U.S. policies is absolutely essential right now for anyone trying to make sense of the global economic picture.
Absolutely. So if you found this deep dive helpful for understanding current affairs, particularly complex topics relevant to exams and general knowledge, please do like and subscribe for more analyses like this.
And let us know your thoughts or any further questions in the comments below.
We appreciate the engagement. And just to reiterate, our discussion today drew heavily from analysis in the Global Times, alongside those other international reports we mentioned earlier.